Morning to you all. Hope you're all well. Bit of a sun. We saw the sun yesterday. Someone said it was 25, 26 degrees in London. Morning to you, Justin. Yeah. Morning all. Start of another week. Gosh, May the 20th. Amazing. David, morning to you. Paul, morning to you. Pete, morning to you. Yeah, two Petes. Basil, morning to you as well. Yeah. So this part of the workshop, we're just going to have a look at what's driving these markets. Morning to you, Carnell, as well. Just to sort of try and work out what's causing these moves. Not as important as Stuart's bit, that the technical analysis, the look at the strategies and the charts is absolutely key. But this gives you a bit of a flavour of what's driving those markets. Morning to you, Paul, the other Paul. Anyway, it's an important week for our markets, sterling markets. Yeah, look what's coming out this week. We've got, CPI, inflation data. We'll get onto that in a second, but I'm going to give you a little recap of what happened last week. So I'll just open up Forex Factor, and as usual, we tend to dwell on the US markets, which just gobsmacking, really. I shouldn't be gobsmacked anymore. I'm nearly 65. I've seen it all. But anyone who is in any doubt that you buy the dip, it just every time the US market dips, and the interest rate debacle in the US with stickier inflation, stickier core inflation, sticky PPI now last week, but market's still going up. We had 6 or 7 interest rate cuts were expected this year in January. Now, we still haven't had any, and the likelihood is we're going to probably have 2 by the end of the year. And here we are, record highs. Look where the Dow is. Dow Jones, US 30, closed above. Oops. That's not responding. What have I done there? Log out. Back in again. No. Quickly open another browser. Quickly open another browser. Get there in the end. So, just so we know, the Dow Jones, US 30, yep, above 40,000. 40,000. When I got into the business, it was lower than 1,000. It's 40,000. You know, look where it was back in mid-April, 37,000. You go back, don't have to go back far. You know, last November, 32,000. It's an extraordinary move. Pete, if the S&P keeps bullish, do you think we won't get any interest rate rises at all? See, that's really interesting. Pete's asked the question, how can we have an economy with low inflation, which would be down to slower economic activity, and the market's going up? You're spot on, Pete. Well, it's a good question anyway. The fact is, getting the Goldilocks scenario, not too hot, not too cold, is an impossible task for central banks, that's for sure. And I think it's just out of pure luck that it happens. It could be that these US markets are just on one, and they're just ignoring the fundamentals, just don't want to hear about them. And it's a lot of investors, traders, money managers are just hardwired now to buy the market. And it's been an unprecedented period of growth, certainly in technology shares. My granddaughter celebrated her first birthday, and we were having a discussion amongst my daughter's cohort as to what the opportunities were. And I think what's happened in technology over the last 20 years is almost like the internal combustion engine. I just think it's been an extraordinary leap in productivity that has been provided to economies. Yeah, do I think there's opportunities for our young kids? Absolutely, I do. And absolutely, whether I think the stock markets represent the actual value at the moment, does it include the risk where we've come from, what's going on in Ukraine, what's going on in Gaza, the fact that interest rates may not come off at all in the US. You know, a couple of weeks ago, they were talking about interest rate rises possibly. So yeah, if an economy is so strong as represented by new highs across the board in the US, how can we have interest rate cuts? Well, there's only 2 or 1.5 forecasts at the moment, Pete. So yeah, but really interesting question. Anyway, markets last week, I think, were relieved that core inflation came in as expected. If I quickly open up that, thank you, Forex Factory, you can see here the core inflation last week. Let's just get rid of that. I don't want all the little yellow ones. We can see the core inflation here, plus 0.3%. In fact, slightly better than expected month on month for the headline, but the core inflation came in as expected at plus 0.3%. In fact, to be honest, it was actually plus 0.28%, but they rounded up to plus 0.3%. Anyway, and you think, well, so the market came in as expected. The data came in as expected, but equities just ramped it. And if you look what happened last Wednesday when the data came out, this is the S&P 500. That's the day it came out. Wow. And you're thinking, so the data comes in as expected and the market goes higher. Well, part of the problem is the previous day we had this PPI, producer price index, and I think the markets were just so depressed ahead of it. And I think, yeah, it was just a relief, really. Relief because I think there was a sense of gloom about rate prospects, you know, and that dire PPI data that I've just shown you the day before, it sort of got to traders. PPI is called the Producer Price Index. I mean, we've discussed it before. I sometimes describe it as a precursor to inflation, but what it does, it's the change of prices paid at the factory gate. So it measures the price of goods and services, I suppose, at the wholesale level, going into production or prior to what consumers pay for these goods and services when they consume them. So the producer price index, or PPI, can be regarded as a precursor to future inflationary trends, I suppose. So as higher wholesale prices tend to lead to higher consumer prices, you'd expect inflation coming down the track with a higher core PPI. It didn't happen. Well, certainly the core CPI was a relief, but of course, what we've just said is that a high PPI will lead to inflation in the months ahead, not a day later. Anyway, that's markets for you. Pete, going back to your question, it's sometimes difficult. There's no rhyme or reason in the very short term as to what markets do, even over a week, to be honest. Anyway, that was the CPI data, the relief all around, really. And you know, we had the Dow Jones climbing over 500 points, as I said, hitting that 40,000 level. Only just. I think the cash rate was 40,003. So, but it's above 40,000 for the first time. It's another one of those milestones. But in fact, the strongest market last week, you won't be surprised to know, was the Nasdaq, up just over 2.2%. Actually, not quite the strongest. The Hang Seng was up 4%, but the Hang Seng in Hong Kong is really playing catch up. So all interesting. European markets were less buoyant. So if I look at the DAX, the GER 40, you can see we're sort of just consolidating after the rebound back into record high territory in Germany. And I think the mood is improving there. Germany, the largest trading country within the Eurozone bloc, and really important for its growth and engine, at least it has been over the last sort of 20 years. But Germany has continued to struggle since the war in Ukraine. They were reliant on Russian gas along with Italy. So there's been a big disruption there. And of course, with China really struggling ever since they ended their rolling lockdown last January. Germany has been just a serial underperformer, which is really unusual. And they've got a lot of structural problems in Germany that need to be addressed. Anyway, this thing called the ZEW sentiment reading, was it sometime last week? I had it here. I think it's actually a yellow one, but just to say that the ZEW economic sentiment indicator, it rose again, and that's basically tells us how investors are feeling about the markets, and it continues, and basically you can see that the German markets are making new highs, along with the Eurostock 600, which is the top 600 stocks in the Eurozone. And it's quite impressive. And we also had something called the EEO Business Climate Survey, not last week, but that was earlier on in the month. And it's a survey, a really broad survey of manufacturers and wholesalers, builders, services, retailers, etc. And it's another sign that the Eurozone bloc's second or largest member is really starting to improve, which is partly down to an improvement in the Chinese economy over the last few months. Anyway, on to the UK. Wow, gosh, I mean, I've been away for, I was actually in Hong Kong last week, but in the UK, look at this, just extraordinary. Now, talking about a serial underperformer, I don't know, anyone got any bullish views on the UK? Anyone feeling like it's a market to really focus on? That's what people or managers overseas think. Companies overseas, they are really looking at the UK, and they are picking our companies off left, right, and centre. The mining sector in the FTSE 100, that continues to be supported by surging copper prices. Don't have copper here. Oh, I do have copper. Copper just going through the roof. Massive speculative interest, massive hedge fund interest, especially in the US. This is actually US copper, and it's priced in cents or dollars per pound rather than the price per ton that's traded on the London Metal Exchange. Anyway, so anyone got any views on the UK? Anyone overexposed, underexposed to the UK? I wouldn't be surprised if people have lost interest in it, because it has been a serial underperformer. But wow, look at it all. Certainly BHP's proposed purchase of Anglo is very much in the spotlight, and that's actually down to copper. That's one of the things they're after. They want the copper mines that Anglo has. I know it's been rejected, but I think Anglo have actually put forward their own plans now, which involves a demerger of some of their non-core assets, like the likes of De Beers, the diamond manufacturer or diamond producer. Okay, sterling markets. Anyway, we've got inflation data this week. That's the big thing for us here in the UK. This is the data we're looking at for this week. Where is it? There you go. UK CPI, sterling CPI data. That's Consumer Price Index for all of those of you. Just to remind you what CPI stands for. And yes, you're not misunderstanding it. Inflation is expected to fall from 3.2% to 2.1%. And I look at this and I just think, we were up at 11.1%. We had the worst inflation readings in the developed world. Look at it now. Well, hasn't actually been released yet. That's this Wednesday. But that's a significant move, and that's down mainly to this 12% reduction in something called the regulatory cap on household energy. And so you'll have noticed it in your bills last month, or you should have done, unless you've got a fixed tariff that you agreed to a few months ago. Anyway, what's interesting is the Financial Times have pointed out that if the CPI does fall to 2.1% as expected, it would mean that inflation here in the UK is lower than the US inflation for the second month in a row. It would also mean that inflation would be lower in the UK than in the Eurozone. And that's the first time that's happened since March 22. Anyway, how times have changed. Yeah, as I said, inflation peaked at 11.1%, far higher than in the US and in the Eurozone. So that'll give the Monetary Policy Committee at the Bank of England something to think about when they meet this week to, not this week, it's May, later, it's next week, I think it is, to deliberate on interest rates. We're not expecting any rate cut. We're not expecting a rate cut in June either. We're expecting, probably the likelihood is that the first rate cut will be in August. Yeah, well, politicians do. Pete just says politicians will be bragging about it. I suppose in a way, Pete, they get it in the neck if the economy is doing badly, where it's not always under their control. Certainly, they don't control interest rates, thank God. But yeah, you'll get a lot of that. Yeah. Well, this is big thing, wasn't it? Where Sunak said he wanted inflation to dip to hit his 5% target by December last year, and when it did, there was like a massive fanfare. It's like as if he had any control over it. UK seems more positive than the population feels. I think so. Food inflation for the first 12 months was 24%. For the last 12 months, yeah. I mean, it's improved significantly. I think food inflation is actually falling. I think aren't we in deflation on a lot of food items? And what's the strongest part of our inflation actually is service sector inflation. Just remember that it's not just products; it's also services that feed into the ONS data for inflation. Yeah, it's interesting. I just get the feeling that the mood is definitely improving here. It's definitely improved when you look at the FTSE 250, look at the FTSE 100. They're all hitting, well, FTSE 100, that's all-time highs, but the FTSE 250, that's sort of UK PLC, that's doing better. We're up at 19,000, something like that, which is the highest level it's been for some time. Anyway, all positive. That's what we want to hear. Quickly onto currencies before I tell you what's going on in the calendar this week, what we need to look out for. The US dollar, quickly look at the euro as a good sort of proxy, or I could just show you the US dollar index here. Yes, the dollar fell last week. The euro rallied against the dollar. Sterling, one of the biggest movers against dollar, actually rallied nearly 1.5% against the US dollar. And this is down just to sentiment. This is down to participants overseas really looking at the UK. And remember, if BHP wants to buy Anglo, it's got to pay for it in sterling. So there is, there's a lot of, with this increased M&A activity, that requires a lot of overseas acquirers of any UK company to hedge their potential sterling exposure ahead of a deal. Yeah. Do you think markets will be affected when Biden comes out of the race on June the 23rd? What's happening on June the 23rd? I didn't know that was a possibility. I do know that in the key swing states, these 6 key swing states, he's actually, the readings are not good in Georgia, which is something that he absolutely has to win. I think Biden's going to really struggle from here on in. I didn't know that he'd leave the race on June the 23rd, Pete. That's really interesting. The head of California will replace him. I got to say, he just looks so. What's he going to say? I'm ill. I'm old. Everyone knows he's old, whether they think he's ill or not. Sometimes he behaves like he's ill. Gosh, I didn't know that at all. Pete, that's really interesting. Yeah. I mean, I fear for the US. I mean, the choice, Trump or Biden, really? I mean, if Trump becomes president, he will be the oldest president ever. Obviously, if Biden had, he definitely will be the oldest president. But it's just interesting that out of all the sort of hustings and primaries and God knows what, you end up with Trump and Biden. It's just weird. Yeah. Mind you, who do we get in we got Ronald Reagan, didn't we? Yeah. In the 70s. Extraordinary. Anyway, so that's the dollar. Gold, well, gold just going nuts, really. Gold up another 2-3% last week. It's surging on the back of a softer US dollar. When the dollar strengthens, gold tends to trade sideways. When the dollar weakens, up she goes. And we've seen continuing demand from Chinese retail demand, and also the People's Bank of China, also a heavy big buyer of gold as well, pushing it higher. Oil, not much to talk about really, ticking higher a little bit, up a buck and a half, $2 in the US. Nothing really surprising. The US dollar weakening also helps oil, believe it or not. And I think there's nothing much going on really in the Israel-Hamas war in Gaza. It just continues to rumble on, but at least it's contained in Gaza, which is interesting. And obviously with what's going on in this helicopter crash in Iran on the Azerbaijan border, there are some people suggesting, could it have been the Israelis? I think it really does look like an accident, but they'll have to wait and find out. But they lost their prime minister and foreign minister, so but it's really the Ayatollah that controls all the power. So I don't think anything's going to change, that's for sure. Any effects anticipated? Michael, sorry, I've just answered your question. I didn't actually see it before I was spouting. Yeah, it possibly, it depends what comes out in the media. There has been some chitter chatter, as I said, on social media that it was the Israelis, but I don't think it was, and it doesn't look like it. And they're not actually suggesting that either, even the Iranians. It just looks like a tragic accident. They had 3 helicopters flying in a convoy and flying in rain and fog. Yeah, I'd never go in a helicopter, even if it was clear blue sky. I certainly wouldn't go in one in fog and rain or in the dark. Gosh, yeah. But yeah, it's watch this space, Michael, I'd say. Yeah. Okay, this week, data. Let's get on to right. So we've already had the People's Bank of China. They update the markets every month on their 1- and 5-year loan rates, and there's been no change there. No change was expected. There won't be any effect whatsoever on the market. There is a bank holiday today. I don't know whether any of you have noticed. It will be quiet today because of that. What the bank holidays for? Whit Monday. There you go. Whit Monday. At least it's on a Monday. It's when you get these May days on a Wednesday and everyone takes the Thursday and Friday off when you're running a business. It's just a nightmare. Anyway, we have one Mr. Waller speaking. This is a member of FOMC. That's their rate setting committee in the US. That's the rate setting committee of the Federal Reserve, the US central bank. That's sort of similar to our monetary policy committee here at the Bank of England. So Mr. Waller, or Christopher Waller, he's speaking at a conference regarding the US dollar, the role of the US dollar. It's something I wouldn't normally mention, but there is this mood amongst some of the BRICS, the likes of Brazil, South Africa, China, Russia, who are looking to try and de-dollarize the global economy. What I mean by that, the global economy, something like 83% of all commerce is in US dollars. I don't think they're going to succeed, but they want to do that partly because the US uses the dollar. It weaponizes it with its sanctions to punish people who don't behave the way they would like them to behave. And I think that's something I'm sure Mr. Waller will be talking about this evening. We then got the release of the monetary policy minutes at the Reserve Bank of Australia. Aussie dollar will be sensitive, but I don't think, not expecting anything particularly interesting. Christine Lagarde, I don't know what she's talking about. It's Frankfurt School of Finance. I'm not sure that's particularly interesting myself. Mr. Waller's talking again on Tuesday. He's a busy chap, Mr. Waller, about the economic outlook. That's more interesting, and monetary policy, and that's at an online event, and that could be interesting if he drops any hints about future rate cuts. Then we've got our own Andrew Bailey. Yeah, Governor of the Bank of England. He's speaking at an event at the London School of Economics in central London. Yeah, markets will be on alert because, the sterling, especially in such a week, anything he talks about, if he talks about anything to do with interest rates, that would be really, really helpful. And could be quite volatile for the markets, of course. Wednesday, I've got what have we got here? Monetary policy meeting for the Reserve Bank of New Zealand, the RBNZ. Not expecting any change in rates at all there. So their cash rate is staying at 5.5%. And then on to what I'd say probably one of the most important releases of the week. This is UK inflation data. We've already discussed it though, but just to remind you, expected to fall sharply from 3.2 to 2.1%. Yes. What's it going to affect? Sterling pairs, absolutely. UK assets, FTSE 100, FTSE 250, gilts, everything. And it could actually affect European markets as well, depending on how it comes out. But if that does come out as expected at 2.1%, that'll have inflation, as I said at the beginning of my piece, below inflation in the US and in the Eurozone. Just extraordinary. Extraordinary. And the funny thing is, the government was blamed for inflation being so high because their policies and they didn't have a credible economic plan. And of course, as Pete was saying earlier on, we're bound to hear from politicians, aren't we? Yeah, look what we've done. Yes. Well, they might say, well, why not? We got blamed for it going up. Why can't we take the credit for when it comes down? And then Thursday, we've got all this manufacturing and services data that comes out from the UK, the Eurozone, and the US, just so you understand, it's an index. It's anything above 50 means that sector is expanding. Anything below 50, it means that sector's contracting. Just look at the overall data here. So manufacturing in the Eurozone is well below 50, 46.2. Yes, it's improving. So we're seeing an improvement in manufacturing across the board, but in the Eurozone, for example, it's still well below 50. So it's still contracting. That's not good. Here in the UK, our manufacturing data was above 50, dipped last month, expected to pick up a little bit, but still marginally below 50, and services data very, very strong, albeit weaker than the previous month's reading. And obviously, all those currency pairs that are connected will all be a little bit interested in this data, but there is so much coming out from so many economies that I don't think it's going to have that great an effect, ironically, unless there's a real standout move. Then on Friday, for the end of the week, we've got our retail sales released at 7 o'clock. Weather-related issues have really made retail sales a little bit sort of choppy. When you look at this chart, look at look how sort of volatile it's been over the last 3 months, down to the weather. Apparently, we've been buying umbrellas and not the swimming costumes. Or maybe canoes, I don't know. Anyway, but retail sales are expected to have fallen 0.6%. Sterling will be a little bit sensitive to that release. And then the week is ended with this revised reading on consumer sentiment. And it's only over the last sort of 6 months that consumer sentiment has now been given this high impact. I think it's a really interesting bit of data. It's a leading indicator. It is telling us how the markets will be. If the consumer is happy and contented, they spend more money. And when they spend more money, the economy does better. So this University of Michigan reading, they're upping their previous reading from 67.4 to 67.7. Not bad being in the US, is it? Some of these companies are just worth so much more than all of our FTSE 100 put together. Yeah, we don't have any of them. I did notice that Jeremy Hunt wants to create a £1 trillion company here in the UK. Well, we should stop other countries buying our companies. That's the way to do it. I don't know how you do it. I don't know how you do that. But anyway. So that's it. Thanks for your comments and suggestions, questions. Listen, have a good rest of the week. Pete, really, these stock markets is just look like there's no stopping them, doesn't it? The S&P just up another, up again, up again. Shell leaving the FTSE to the US, it's a possibility. I've heard that as well. Yeah, yeah. That's not the London Stock Exchange. That's down to just lower valuations here. In fact, it's more down to higher valuations in the US, by the way. It's not necessarily that they're depressed here, but they're very elevated in the US. That's fine. Listen, I'd better go. It's 9:20. Thanks very much. Paul, thanks for your comment. Michael, Pete, have a good rest of the week, and we won't catch up again next Monday because it's a bank holiday. Yes, another one. Do I think the Dow will go further? Yes. Ranjiv, only because it's just like there's so much momentum behind it. Normally, if you'd asked me this question in March, what do you think will happen in May? Well, seasonally, markets tend to struggle a little bit at this time of year. Sell in May and go away. Ever heard of that one? Not at the moment. It's don't sell in May and watch it go higher. Stay long. Anyway, the trend's your friend, as they say that, but I'm only telling you what the charts say. My own view is that follow the charts. It's always paid well. Thanks very much. Catch you in a couple of weeks' time. All the best for now. Yeah. Bye now.